There is a financial system forming quietly, beyond what most people can see.
Although it's a purse, it does not belong to banks, governments, or any centralized authority.
It runs continuously, driven entirely by code and mathematical certainty. It does not sleep, pause, or wait for permission from anyone.
This system is called Ethereum, and it is already operating globally.
It is not just a currency. It is a system designed to replace financial logic.
Here, trust is no longer given to people. It is enforced by code.
Every transaction follows rules that cannot be changed once deployed.
This is where money becomes programmable, flexible, and independent from institutions.
It allows value to move globally without permission, delay, or centralized control.
It enables agreements to execute automatically without delay, negotiation, or human interference.
Smart contracts remove uncertainty by enforcing outcomes exactly as they are written. This transforms financial agreements into systems that operate without trust or permission. Decentralized finance allows anyone to access lending, trading, and assets without intermediaries. No approval is required, no authority is needed, only code determines the outcome. Ethereum is powered by Ether, the asset that fuels every action within the network.
Every transaction requires ETH, making it the essential energy behind the entire system.
And this cost is known as gas, a mechanism that ensures the network operates efficiently.
Without gas, no transaction can exist, and the system simply cannot function. Ethereum is secured by participants who lock their assets to validate the network.
These participants are called validators, and they maintain the integrity of every transaction.
To become a validator, assets must be locked, aligning incentives with network security.
The more value secured, the stronger and more resilient the entire system becomes.
Ethereum has evolved beyond a single layer, becoming a system of multiple interconnected layers. The base layer focuses on security, data integrity, and final transaction settlement. Layer 2 networks process transactions faster while relying on Ethereum for security.
These layers work together, separating execution from security to achieve billability.
This design allows Ethereum to scale without compromising its core principles of decentralization.
And Ethereum introduced a new upgrade designed to fundamentally reduce the cost of scalability.
This upgrade introduced blob data, a new way to handle transaction information efficiently.
Blobs allow Layer 2 networks to post data at significantly lower costs.
This dramatically improves scalability without increasing the burden on the base layer.
Ethereum is no longer optimizing for speed alone, but for long-term structural efficiency.
A large portion of digital financial activity now flows directly through Ethereum.
Stablecoins, trading systems, and financial protocols operate at scale on this network. And
it has become one of the primary settlement layers for digital value worldwide.
Billions in liquidity move across this system, forming a new financial foundation.
Ethereum is no longer experimental. It is becoming part of the global financial infrastructure.
But as the system expands, a more complex question begins to emerge.
If activity moves to layer 2, where does the value truly accumulate?
Ethereum secures the system, but execution increasingly happens elsewhere. This creates a separation between infrastructure strength and direct economic capture.
Ethereum is no longer just a network. It is becoming a foundational layer of digital finance.
Its value may not always be obvious, but its presence becomes increasingly unavoidable.
It does not compete for attention. It integrates into the structure of modern systems.
The strongest infrastructures are not seen, but everything eventually depends on them.
Ethereum is moving toward that position, quietly shaping the future of financial systems.
Every system begins unnoticed, growing silently until it becomes impossible to replace.
Ethereum is following that path, not through noise, but through structural necessity.
It does not ask to be adopted. It becomes integrated into the systems that matter.
Over time, its presence reshapes how value moves, settles, and exists.
And eventually, the system is no longer questioned. It is simply accepted as reality.
At this stage, the system no longer needs validation. It defines its own relevance.
Its strength is not measured by attention, but by the systems that rely on it.
Financial structures begin to adapt around it rather than compete against it.
What once appeared experimental is now becoming foundational to modern finance.
And the transition happens quietly, without disruption, but with irreversible impact.
At a certain point, infrastructure stops being noticed and starts being assumed.
Ethereum is approaching that threshold, where its presence becomes part of the system itself.
It no longer competes for relevance. It defines the environment in which relevance exists.
What was once optional is becoming essential, not through force, but through function.
And when a system reaches that point, it no longer needs to explain itself.
Some systems are built to be used. Others are built to become unavoidable.
Ethereum is not designed to impress. It is designed to persist.
It does not need to dominate the present because it is positioning for the future.
And systems built with that intention are rarely replaced once fully established.
Because once infrastructure is trusted, it becomes the foundation everything else depends on.
Ethereum is not just a technology. It is a shift in how systems are designed.
It replaces control with rules and trust with transparent execution.
And once that shift begins, it does not reverse. It only expands.
What starts as innovation becomes infrastructure, and infrastructure becomes reality.
And when reality changes, the world does not notice until it is already different.